Hey, everybody. Welcome back to the Be Your Own Bank podcast. It's everybody's favorite time of the week, the weekly roundup.
You had a little extra in that, I think.
Yeah, it was a hawk.
Yeah,
Yeah.
that's all right. Welcome back, everybody. Good to see y'all. Wish I could see you, but we're here. We're ready. Big news this week. Big news. But first, please remember to like, subscribe, drop a comment. We appreciate that. So, Google getting into crypto big to the tune of $1.5 billion. We're going to get to that. Additionally, Coinbase, a couple execs have been hit pretty hard with insider trading. And finally, the Federal Reserve is going to stop CBDCs. Ooh, what does that mean? What are they going to do instead? We'll let you know. I think we need like some music, some dun 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 dun, you know, after that. What do you think?
Okay. I'll talk to the editor.
All right, you talk to the editor. So first up, Google. $1.5 billion has been invested into crypto platforms. And the big corporations, the legacy companies, as they're called, have invested over $6 billion from September 2001 to June 2022. Did I say 2001?
21, I assume.
21, yeah. 21 to 22. September 21 to June 22. Over $6 billion invested through the legacy companies into crypto projects.
Because if you meant 2001, crypto wasn't even around in 2001. So,
Well, what about Hashcash?
Oh, I don't know.
Anyways. So Alphabet, the parent company of Google, they have specifically put quite a bit of money into companies like Dapper Labs, which brought you CryptoKitties, as well as Top Shots, which is those trading cards that we talked about, the NFT sports clips and...
That's NBA, right? Top Shots? I think Top Shots is just NBA.
Is it just NBA?
Pretty sure, yeah.
Okay. Well, either way, trading cards, snippets of clips in NFT form. So big company. We talk about BlackRock. They're invested in Circle and FTX, the exchange. Circle, of course, is the company that brought you USDC and functions as sort of the clearinghouse for that. Samsung is getting big into the gaming world with Yuga Labs. Sorry, Yuga Labs isn't gaming yet. Sky Mavis, which is Axie Infinity, the cute little Pokemon trading game. Animoca Brands, which we talked about. They make some really big mobile games with crypto included. And then Yuga Labs, of course, is the big NFT company that makes Bored Ape Yacht Club, Mutant Kennel Club, all those different board collections that are insanely valued. PayPal's getting in. Let's see, Citibank. LG is invested in Sandbox. So a lot of these big name companies, Microsoft, Consensus, they're all getting into crypto.
It's not just Google, right? Google's 1.5 billion. These other companies are more than that, correct?
Well, it looks like
you said $6 billion.
$6 billion total, with I think Google leading the charge.
Since late last year.
Since late last year, yeah.
That's a lot of money in a short amount of time.
In 7 months, $6 billion invested throughout all these companies into crypto. A lot being...
Don't hold me on the math, but that's almost $1 billion a month.
I'm going to hold you on the math. But yeah, you're right.
I'm right.
It's close. It's close to $1 billion a month. And now BlackRock's partnered with, because it's not on here, BlackRock's partnered with Coinbase now.
Okay.
So some are saying, well, they crashed Terra and now they're buying the dip by partnering with Coinbase.
I'm sure they are.
I'm sure
Why wouldn't they be?
Why wouldn't they? They got to grow their $8 trillion stash.
9
trillion.
Yeah.
Wow. So that's exciting to me. I mean, the rich get richer, but we ride on the backs of giants. So this just shows again how viable this thing is, how it's going to continue to be invested in and grow. I think it's kind of funny that Coinbase got hit with insider trading. I mean, it makes sense. There wasn't really any rules about it that they cared to follow.
This is the segue.
This is the segue.
Got it. Okay.
You like that segue?
Sure.
I think I rode right into it. Yeah. So an independent research study from out of the University of Technology in Sydney found
Australia
found that between 10 to 25% of 146 different token listings on Coinbase were potentially insider traded.
I think potentially is right though.
I think
because they were potentially intentionally.
I like
insider
that.
trading.
Yeah, potentially.
Yeah.
Yeah.
We just made up a word here on the Be Your Own Bank podcast.
I don't think you can say we because it was me, but you defined it. So.
I defined it.
Yeah.
So it's we.
Okay.
We made up a word together.
So potentially they were insider trading. And the way that they figured this out through the study is they looked at DEXs, decentralized exchanges. The sweet spot was 250 hours before listing. And they
Let's back it up a little bit.
Okay.
Insider trading, for those of you who don't know.
Oh, right. Right.
Insider trading is basically getting information early so that you can make a decision on what horse to ride. Like if they were like, hey, this horse is taking a bunch of steroids,
you should probably bet on him.
You should probably bet on him. And then you do bet on him. That would be insider trading.
A better example would be you work for Apple and you're a top CEO and you know what their earnings report is going to be and you know it's going to be a loss. And so you sell $1 billion worth of shares before the earnings report comes out.
That is also an example of insider trading, right?
So it gives you an unfair advantage to the market to gain money.
Or here's an even better example.
What's your example?
What if you're in Congress and you know that you're going to be writing some legislation and voting on it and it's going to pass, and that has to do with solar panels or has to do with infrastructure or has to do with starting a war somewhere, then you would probably buy into some of those military industrial complex companies and you'd make a ton of money. Or why don't we just go for what actually happened when Congress just bought a bunch of oil companies right before they jacked up the price?
Love it. So now that we understand what insider trading is, they looked at 100 to 300 hours on DEXs before the initial listing of these coins on or tokens on Coinbase. And what they found was a sweet spot of 250 hours before. There were on 10 to 25% of these coins, a irregular pump up of value on these seemingly random coins. Then they were listed. And of course, the price plummets because people buy in and then the insiders take their profits.
Well, it doesn't plummet right away. It pumps more because it gets listed. And then all of the noobs, the rubes, they buy in high and then they get eviscerated. Happens all the time.
Yep.
But the rich get richer.
And so there is a Coinbase executive that's been charged by the Department of Justice, and he is pleading not guilty. So we'll see how that goes.
Well, and I think it just boils down to the fact that we don't have regulation. If we had regulation right now, it's Keystone Cops. They're penalizing people after the fact as opposed to writing the rules. If the rules were in place that said you can't, buy something before it's listed, then nobody would, right? Or at least they'd be more ambiguous about it.
Yeah. Well, and more specifically, the name of the Coinbase product manager that was charged, his name is Ihsan Wahai, and authorities are claiming that he shared pre-listing announcements with two others and made over $1 million from their insider trading.
Which doesn't seem like a lot, but if he made $1 million, that means somebody lost $1 million.
Right. Exactly. Finally, we talked before about central bank digital currencies, CBDCs, or Americoin. Americoin. And we told you that we'd update you. So here's the update. The Feds, specifically Governor Bowman, she's a part of the board of governors for the Federal Reserve. She's saying we don't need CBDCs. We don't need central bank digital currencies.
I agree. We already have crypto.
We have crypto, but they want to have something they can control.
Wait a minute. They're not going to go in on crypto? I thought that's what we were trying to do.
No, because they say they have a much better option.
There has to be a better way.
There's a better option, and it's called Fed Now.
Fed Now?
Fed Now.
Okay.
Yep. And what it is an 8-step process to giving you instant transactions between banks.
Sounds like Venmo.
It's like Venmo, but totally controlled by the government and has way more steps.
And that's better than crypto?
I'm not saying it's better. They're just saying it will fulfill. Bowman is saying it will fulfill. Yes.
They're saying this is better than crypto.
They're saying it will fulfill the same duties that the CBDC will. So why do we need to even do it? Because it's still going to function the same. Because it's going to give you instant money, 24/7, bank to bank, even small branch banks across the United States. It's supposed to roll out mid next year.
That sounds cool.
Does it?
Does it?
Not to me.
Well, it does. It does exactly what crypto does, but it's governed by the government.
It's governed by the government. So basically, there's 8 steps. There's a diagram for it.
Read through all of the 8 steps.
You want me to read through them all?
I want you to read through them all.
Okay. So I'll read this just like one of those pill ads at the bottom.
So the goal, though, right, is that it's like Zelle. So you're going bank to bank, almost instantaneous transfers, and they settle immediately. And
it says within seconds.
Okay, so you transfer within seconds. So Zelle's like that, right? Zelle does a pretty good job of that. I don't know how Zelle monetizes, but they obviously work. So they're taking that instead of investing in blockchain.
Right. And with blockchain, it's 2 steps, 3 steps. This is 8. So let me give you the Cialis abridged version, super fast reading when they give you all the side effects. So here are the side effects of
what's it called?
Fed Now.
Fed Now.
Fed Now.
I want my Fed now.
Step 1. A sender initiates a payment by sending a payment message to its financial institution through an end-user interface outside the Fed Now service. The sender's financial institution is responsible for screening the payment according to the internal process and requirements. Step 2. The sender's financial institution submits a payment message to the Fed Now service. Step 3. The Fed Now service validates the payment message, for example, by verifying the message meets message format specifications. Step 4. The Fed Now service sends the contents of the payment message to the receiver's financial institutions to seek confirmation that the receiver's financial institution intends to accept the payment message. At this point, the receiver's financial institution will have the opportunity to confirm or deny that it maintains the specified account. Step 5. The receiver's financial institution sends a positive response to the Fed Now service, confirming that it intends to accept the payment message. Steps 4 and 5 are intended to reduce the number of misdirected payments and resulting exception cases that can occur in high-volume systems. Step 6. The Fed Now service debits and credits the designated master accounts of the senders and receivers' financial institutions or their correspondent financial institutions, respectively. Step 7. The Fed Now service sends a payment message forward to the receiver's financial institution with an advice of credit and, in parallel, sends the acknowledgement to the sender's financial institution notifying it that settlement is complete. And finally, Step 8, the receiver's financial institution credits the receiver's account.
As a term of Fed Now service, the Federal Reserve Bank anticipates requiring the receiver's financial institution to make funds available to the receivers almost immediately after Step 7. This crediting to the receiver's account as well as the debiting of the sender's account by their respective financial institutions happens outside the
Fed Now service.
Oh, is that all?
That's it.
Wow.
It's a 5-step process that they do in 8 steps.
It sounds like the government to me.
Mm-hmm.
Yeah.
Or you could just send some US dollar coin from point A to point B in 1 step.
Because it just gets validated by a bunch of computers and there's no middlemen involved.
And you don't have to agree to accepting the money. It just gets sent there.
Right.
And you can't double spend it.
And you don't have underwriters and you don't have, trusting banks with your money is what we're talking about is the problem. So now we're just saying, well, let's let the government and the banks work together.
We're adding literally another, there's 3. So if you look at the diagram, there's sender and receiver, right?
Yep.
There's 3 middlemen. There's sender's institution, FedNow service, receiver's institution. They've literally added more middlemen to this process
Than the current process? Okay.
Because the current process is 2 financial institutions.
But I'm sure there's still a lot of behind the scenes stuff that has to happen.
For sure. But
with wire transfers. So it's less expensive for the consumer or for the person utilizing the banking, the new banking, the FedNow banking system, but there's more mouths to feed.
Mm-hmm.
It seems like they might get a smaller percentage, sure, but it sounds like they're adding these steps so that they don't lose their grasp on the financial system.
Yeah, not ideal. I can wait for FedNow.
I can wait.
So we'll see. 2023 is when it's supposed to come out.
Oh, this is happening.
This is look the other way. It's literally the opposite of what we want. Mm-hmm. Hate it.
Even a CBDC would be better than this.
It would.
But
we're not going to get that.
We're not going to get that.
At least now. Thanks, Michelle Bowman. That's the roundup. Thanks for tuning in.
All right, let's take a look at those charts. All right, let's take a look at Bitcoin. Right now, we're sitting just over 20,000, right around 20,200. You can see that we have failed the 50-day moving average. It is acting as resistance. We need to make it above the 50-day moving average. I've also drawn a head and shoulders pattern here, which I've noticed is a potential. The right shoulder hasn't been made yet, but we could go back up to 22 before we come back down to 20 for the last time before we break 20 and move down. If we take a look at the other chart, we have that bear flag that we looked at last week, and that did confirm the move could take us down to 18K. Looking at a third chart, same thing. We have a bigger bear flag that did confirm. We have a resistance line in green here that has acted as resistance for quite some time. This move is a little more dangerous. You can see 9,000. So in the 10K range, that one's a little scarier. As long as 20K can maintain, the longer it can, the better chance we have to go back up. But as you can see, these charts reject quickly. So I would be conservative at this point. All right, let's take a look at total market cap. We are still right around the $1 trillion mark. That needs to hold. And we need to break 1.2 in order for momentum to change at all. All right, let's take a look at dollar cost averaging. I've got Verge XVG. It is a third of a penny at the moment, so you can buy a lot for a little. This one has revisited basically back to ground zero. It's been correcting for over a year now. Might be a good opportunity. Next, we've got Waves. Waves is $4.50. Waves likes to pump and dump. Seems to be bottoming out. Might be a good time. And finally, Litecoin. Same thing. We seem to be finding a little bit of a bottom here, right at $55. Might be a good opportunity for Litecoin. That's it for the charts, gang. We are the Bit Bros. Remember, we are not licensed financial advisors. All content is intended for educational purposes only. Please do your own research and only risk what you're willing to lose. We'll see you next week.
Thanks for tuning in. Please remember to like, subscribe, follow, comment, all those great things. And you can also listen to us on Apple Podcasts and Spotify. We'll see you next week.